Hi everyone, my name is Naveed and I'm from Cogenics, one of SnapLogic partners. Today we want to talk about continuous close, what that means, why is it important, and how that can be achieved using a modern technology stack, all integrated using a SnapLogic platform. So what is continuous close? Continuous close sits under the broader umbrella of continuous accounting. It's a process enabled by technology and people to distribute close activities, automate close activities, and align them with the broader business. So the idea here is to flatten the curve, the close curve, and make it more continuous through tools and technology. So you can dedicate your resources on more value-added tasks throughout the month rather than allocating an enormous amount of resource for a specific time period. Now let's talk about the advantages of continuous close. The idea behind continuous close is that your business is continuous, so your close cycle should be continuous as well. So the very first thing which comes to our mind is efficiency and collaborative approach. So integration, rule-based automation, and task management make the entire process more efficient and collaborative. The task managers don't have to be in one office or location or time zone to complete all the tasks. Perhaps this resonates more with today's timeline as the teams are more fragmented and geographically diverse. The other advantage of continuous close is that it's less reactive, as the traditional methods are very reactive. They leave no time to evaluate and analyze results, as much of the information is based on lagging indicators. Continuous close, however, delivers real-time intelligence and enables the organization to see its competitive advantage. The other side is that if you look at number four, it also eliminates redundancy and errors. A stringent and more forensic approach to close in a short period of time puts a strain on resources, and it's the entire process is error prone. So this eliminates that. Let's talk about the three distinct layers of or components of continuous close. One is the source system, second, the workflow layer, third is the reporting layer. In order to modernize the entire record to report process, you have to improve on all these three distinct layers. Let's call it data, close management, and performance management reporting. Goal here is to achieve end-to-end process management automation, and for that, data connectivity is prime. First, data has to be automated from your ERP and other source system. In our case, we use SnapLogic Integration Cloud pre-built API connectors to move information rapidly and consistently. This automation covers transaction data, master data, and metadata. Second, we utilize a close management software to automate account reconciliation and bolster controls around it. If we improve visibility across remote team members via task management and then ensure audit readiness. Third layer is equally important as automated consolidation and reporting closes the loop, and now you are connected and ready to report and file with real-time data flow. This is just an example of the four software which forms the part of the modern technology stack to achieve the continuous close process. You have FloQast, which centralizes and streamlines the close to get a fully reconciled audit-ready trial balance. You have Planful. Planful, it performs the GAAP and IFRS consolidation across multiple entities with distinct ownership rules and subsidiary rules. Application is also used for driver-based scenario analysis, KPI reporting, and management reporting. And then you have Workiva. Workiva is more of a collaborative, document-centric, composite reporting tool. You can build SEC filing, 10K, 10Q reports out of it. You have the XBRL technology available. You can build the IPO and capital markets, publish those reports, S1, S3, S4. You can publish investor relationship reports, 8K, Business Wire. Regulatory reporting is part of the package, CCRS, CCAR, DFAST, and other statutory reporting as required. The fourth software, which connects all these applications and enables the data flow from one application to another so it's seamless, is SnapLogic. In this case, the SnapLogic pre-built API connectors. Now that we have collected the data, consolidated it, and closed the book, we can run the financial statements along with internal and external reports, such as balance sheet, equity investments, income statement, and cash flow, among others. This is a prime example of a balance sheet which we have built for this purpose. As you can see, it's a consolidating balance sheet, so it has the entity going in the columns along with intercompany eliminations. We can drill down into specific account and look at the leaf level members. You can also drill through to look at all the transactions for a specific account. As you can see, we have already reconciled, due to our previous efforts, total assets to total liabilities and stakeholders' equity. This is an example of income statement where you have the sales, net sales, total cost of sales, gross margin, operating expense, all the way to net income from shareholders' operation or your variable profit contribution. Again, similar setup as a balance sheet. You can actually drill down into all your compensation items, look at all your item at a leaf level, and you can drill through to look at the transaction level. Similarly, you have equity investment reports where you have the percentage of ownership defined by entity, equity income loss calculations defined for you, and total equity income and loss. Similarly, again, you also have the intercompany AR reconciliation. So all the intercompany transaction needs to be reconciled. The system automatically does it for you. You don't have to make any effort to do that. You can easily run your cash flow statements now. Cash flow statements are already reconciled. All the movements are captured. You can look at the changes in components of working capital. You can look at net cash provided by operating activities. You can look at cash flow from financing activities and also look at the net increase, decrease in cash flow and cash equivalents. You also have a waterfall methodology built to kind of track the movements of cash flow. The great thing about this reporting is that you can actually you can change the entity and you can actually run at a higher level or pick any entity and you should be able to run the cash flow for that specific entity or a group of entities.